Hey, thanks for making it to Veterans Info Tap. I'm excited to be here to talk to you today, so please hit the like button, subscribe, share it with a friend, hit the notifications bell, all that good stuff. And on this channel, again, really I'm just trying to disseminate information that helps all of us in every way. I'm usually very focused on VA disability, VA benefits, on the disability piece of it. In this case, I'm going to talk about if you ended up getting a big chunk of money back from back pay because you filed your appeal and went through that process, took a while, you get 20 months of back pay, depending on how much you're paid per month. I mean, this could equal $100,000, right? So I've seen $100,000, $150,000 back pays because the person filed an intent to file, then held off 10 months, then filed their claim. That took another 10 months. Then that claim came back 0%. Then they filed an appeal, and that took another 10 months. And then they got approved at whatever, right? So it will back pay you 30 months in that scenario. So 30 months could be a lot of money. If you're a 100%er from that scenario, that could be $100,000. Right there. So now you have this money, nice safety net, you pay off all your bills, you're feeling good. Maybe you want to buy a house, we'll just say, or invest it, whatever. I am not a financial advisor, nothing like that. So this is just informational, own personal experience, information for you to just kind of turn on the light bulb and maybe look into some things yourself. Always do your own due diligence. So I did happen to be in the mortgage industry for 12 years. I was a sales manager, ran teams, all that good stuff. So I do have some experience in the mortgage industry. So I'm happy to share what I know with you. Now, when it comes to buying a house, one thing is interest rate, right? So interest rates flux, every day they do fluctuate until you actually lock in a loan in that process. So they are higher now today than they used to be, 6 months ago, 8 months ago, but they are still historically low in the big picture, right? So when we think back to the worst case scenarios, say the Carter years, you're looking in the teens, 13 to 18% interest rates, and now we're probably sitting around, the fives. So still a very, very good level to be at. Now, when you're looking to purchase a home, one of the big benefits of a VA home loan today is that there is no limit, no imposed limit on the amount that you can borrow as long as you qualify for it with your income and debt to income ratio, right? So your debt to income ratio is, to just use some simple math, and this is, safe, we'll say. The way they look at it is they take your entire gross income, and in this case, if you have VA disability, that's tax-free money. So you would take that dollar amount and you would gross it up. So example would be, if you're getting $1,000 from the VA, but it's tax-free, the lender will say, okay, that $1,000 is now 125% of that amount, which is $1,250, and call that your gross income from the VA. And they'll use that for qualifying purposes. So they would add that plus your whatever other incomes you have, get your total gross income, and then take 45% of that is a safe number. Take 45% of that. So let's just, to use easy math, let's say that you had $10,000 coming into your household per year, per month. It's, it's $120,000, couple earners, you got VA money, all that good stuff. You got $120,000 coming in per year, $10,000 per month. That $10,000 per month, then that would be $4,500, right? The 45%. That $4,500 represents your whatever you're going to qualify mortgage payment wise with your real estate taxes, insurance, and all of your other bills that are reporting on your credit report, like your car, credit cards, and so forth. So you can back into the number by taking that $4,500 in this example and minusing out the bills that show up on your credit report. So if you minus out all the minimum payments that are due, and then let's say that that's $1,000, right? So you got $1,000 off of that. Now you're at $3,500. You have $3,500 in which you could use for a mortgage payment that includes your taxes and insurance. Online, there's 1,000 different calculators, mortgage calculators that you could plug in the information, realtor.com, all that type of stuff will be able to give you the estimates on those numbers as you're running the calculations. And as long as your mortgage payment with taxes and insurance does not exceed that $3,500, you're probably going to be good to go in your mindset as far as what you would be able to get approved for loan-wise and purchase price-wise in the case that you go 100% financing. Now, for people who have large incomes or a bunch of different income streams, again, there's no limit on the maximum amount of the loan amount for lenders now. There used to be an imposed limit that you couldn't go over. And in high-cost living areas, it made it very difficult for people to be able to buy houses using VA because the imposed limit was too low. Now, if you're a disabled veteran, you get to waive the VA funding fee, which is typically about 1% of the loan amount. So if you bought a $500,000 house, that's a $5,000 savings. If you bought $1 million house, it's a $10,000 savings. So important to know that you can waive that by being a disabled veteran. It's also retroactive, or that's the best way I could put it. You can also go through the process. If you have a claim in process today and you buy a house tomorrow and you close on that house, and then the day after you close, you get your award from the VA that says, hey, congratulations, you're a 30% rated veteran. You get back pay to back here, which means you were a disabled veteran prior to buying the house. And you can contact the lender and have them reimburse you that VA funding fee. So that's a very, very important thing to know as well. Now, when you're looking to purchase a house, there's obviously a lot of different factors that come into mind, but you really want to make sure that you're pre-approved ideally. So the math that I gave you gives you an idea so you can see kind of where you're at, but get approved with a lender if you're serious about it, because getting approved will help you understand exactly where you fall as far as your purchasing power is concerned. And it's also important to note that just because you get pre-approved for a loan doesn't commit you to anything, right? So you don't have to move forward with anything, right? You're just getting the numbers. Yes, they run your credit. Yes, your credit's going to be dinged 3 points or whatever, potentially. So there is that piece. But if you run your credit with, say, 2 lenders within a 2-week period, 4 mortgages, it only counts as once. So double check on that, but I'm pretty sure that it's about a 2-week time period, that if you're running for mortgages, it only counts as one time. Another great thing about VA is they really streamlined the process now and really made it easy. The only thing you need to get other than an appraisal on the property is a pest inspection. So pest inspection and appraisal on the property, and you're good to go. So today, it's just sharing information and trying to enlighten folks a little bit on different things out there. So I appreciate it if you stuck with me this long. Thanks again. Have a great one. And remember, if we don't take care of each other, something went wrong.